Just given the fact that as a freight railroad that moves not only goods in the U.S. but throughout North America, you have a lot of real-time data in terms of what those volumes look like and how it speaks to demand or maybe even lack of demand in some industries right now. What are you seeing in real time, and how would you expect that to change or shift or even recover in the coming months?
Okay, we're seeing, we have a broad, very diverse portfolio of businesses ranging from agriculture, food, chemicals, paper, autos, intermodal. And what we are seeing is each one of those segments is responding differently to what's going on. We've seen areas of weakness, particularly in intermodal, our international intermodal, largely in and out of Mexico, largely based on trade with Asia and specifically China. We started to see those volumes, that business drop off really at the end of February and in through March. Automotive is about 10%, a little less than 10% of our business. We saw that really drop off in the middle of March and continues on into April. Obviously, you all are very familiar with the headlines on the auto sector, a lot of plant closures, although we do see, based on announcements that have been made recently, that those plants are going to start to come back in the next few weeks or months. So we're trying to be prepared for that. On the other hand, agriculture, food products continues to be strong. Paper, chemicals, we are handling packaging, products for packaging and delivery type of materials, as well as chemicals that are used in some of the solvents. So it's really a mixed bag, and we're seeing overall declines here in the last few weeks, but we are very focused on trying to respond with cost savings measures, but be prepared for a recovery. Whatever happens, we're not making a bet on the economy. We want to make sure that we're prepared for whatever recovery we have and whenever that occurs.
Yeah, and certainly you pulled your guidance for the year as well, like we've seen many companies do. In terms of not making a bet on the economy right now, does it feel like we're in a recession from your viewpoint?
Well, I'll leave it to the economists to get into the technical definition of a recession. We are definitely seeing a downturn. And although if you saw our first quarter results, there was a very strong first quarter. Would have been even stronger had we not seen the weakness in a couple of areas, particularly in the end of the quarter. But so far in April, and of course, railroads report their car loadings every week, so you all have good visibility to what's going on. We're down, and particularly down in the areas that I mentioned, international intermodal, although we've seen some recovery there. Domestic intermodal and cross-border has actually been strong, and that's really more of a market share opportunity. But automotive has fallen to very low levels here recently.
Yeah, as a railroad, you're deemed critical infrastructure, which means you keep operations going, you keep trains running. And as I mentioned earlier, not just in the U.S., but also in our neighbor to the south, Mexico, which is such a key trade partner for the U.S., we've been very focused. I think the markets have been very focused on how this pandemic is playing out, potential recovery is playing out in the U.S. and Europe, in China and other parts of Asia. But what are you seeing on the ground in Mexico? And how does that factor into your broader efforts to keep employees across both borders safe and keep those trains running?
Okay, let me pick up on one thing you said, and I'll take, if you'll indulge me for 15 seconds, and really call out the railroaders, the railroad workers, our employees, but all across North America. We are critical. We are essential business in both U.S. and Mexico, and really want to draw attention to the frontline heroes in our business and our company that have still come to work and done their job and be prepared to keep our customers, our economies rolling. And when the recovery comes, we're going to be crucial to helping drive that recovery. As far as your other question about the response, we started doing things here in the U.S. probably in early March, some in reaction to guidelines that we were getting from government agencies at all levels, state, local, federal. And as we rolled those sanitary procedures out, we rolled them across our entire network. So It wasn't a matter of where do we need to do this because of guidelines from governments. We just did it across our entire network, starting with distancing and then sanitizing everything from office buildings to locomotive shops to cabs of locomotives so that we could try to keep our workers healthy and safe. And I can give you statistics. We did have our earnings call this morning, and I gave some data on that call. We've had a very good health profile of our employees, both in the U.S. and Mexico, and very few situations where we've had workers with symptoms, and let alone with COVID. Most of the people that we have staying at home, other than those office workers that can do their job from home, which represents about 15% of our workforce, the folks that we've had respond and stay at home according with these sanitary guidelines are usually workers who are not symptomatic but have either health conditions or age, and particularly in Mexico, that would suggest that they stay at home under the federal sanitary guidelines.